Have you ever thought what it means to have financial freedom? Okay, so I did it. The last couple of years has been tough. 2022 was a disaster year. I suffered massive losses because of the coins that I was in. I mean, literally everything went down, but you got to really pay attention to what's happening right now in the market. Bitcoin flow ETFs, Bitcoin flows into ETFs now is basically bleeding out grayscale, and it's moving into your regular ETFs from Fidelity and from BlackRock. A lot of people, what they're doing is they're thinking about this and saying, look, it's going to go down. It's going to go down another 20-30%. Why? Because we've pumped so much. If you take a look at Bitcoin's price since the bottom back last year, you looked at it and you're saying to yourself, I want another entry so I can get back in. You got to keep in mind, everybody is thinking that way. Nobody right now is thinking that this thing is going to take off to 100. In fact, a lot of people are expecting a 30% retrace to 20,000, 30,000, whatever the case is. I also think there is a possibility we may get to 32, but it's a low probability event now that we've seen the dip at 38 and 36, and the market just keeps on buying this. There is a wave of institutional purchasing that's happening at the moment, and many people are falling asleep at the wheel, including you. Some people are sidelined because they expect that the market to crack now and maybe next month or maybe in 3 weeks, but the problem is that may never come. So what I'm here to tell you is that in the next couple of months, as we enter into the halving cycle, we may get one more dip, maybe a 20-30% dip somewhere down the line. We may not, but the longer you're waiting for it, the more likely it's not going to come, because everybody is in the same herd mentality. Everybody's still shell-shocked from 2022. They're still shell-shocked from 2023, in fact, because they were putting their money in cash, getting 5% yield, and now the Fed hasn't really technically cut rates, so they're still parking it there. And what's happening is the market is just taking off because some people realize that 5% after inflation, after taxes, it's not a lot compared to, let's just say, a 3x gain on Bitcoin at the bottom. Now, I'm not here to kind of tell you to FOMO. What I'm here to tell you is that this is it. This is the last run. I've been talking about this on my channel for the last 6-7 years, investing in Bitcoin and crypto, and I've done fantastic. I've done very well for myself. But the one thing I want to share with you is you don't want to be the guy that's buying the ETF when Bitcoin's already at 100, 200K. And the simple reason is because many of these coins are going to get institutionalized at some point. We are already seeing that with the crackdown on many of retail buying these coins, because they're saying that you are just not smart enough to invest. So what you need to do is put that money into an ETF so that we can professionally manage it for you. They're also starting seeing crackdowns on the regulation side, where they're saying DeFi is not acceptable. You can't have people trading coins on DeFi exchanges because you just don't have the sophistication and you don't have the knowledge to not lose your money and then eventually come crying to the government for help. So what's happening is they're basically shutting out all the avenues where you can potentially be making 10-20x gains. Instead, you're going to be making 10-20%, maybe 5% at best on some of these cryptos moving forward. Now, my plan of action at the moment is not necessarily to be chasing altcoins, but to be focused on where the institutions are going to start purchasing the big bags. In our last cycle, we did have institutions buying into Bitcoin, into altcoins. We saw the VCs jump right in. We saw the hedge funds jump in. We saw Sam Bankman-Fried and his Coinbase venture, his FTX ventures, along with Brian Armstrong, Coinbase Ventures, trying to get into the game. And what's going to happen here moving forward is we're going to start to see a re-acceleration of that as part of the overall game. And that's just going to shrink the pie more and more and more. So what I'm here to tell you guys is this. Number one is you got to get into some sort of crypto, whether it be Bitcoin, Ethereum, your favorite altcoin, whatever the case is. You have to think about this very carefully, because your decisions now are going to affect you moving forward as you're going to FOMO in as the market starts to run, or worse yet, buy the very same products that traditional finance has been selling you for the last 20, 30 years. And that is an unfortunate fact, is that you're going to have to pay someone to manage that product for you. Now, the other side of that coin is, what if we do get a bear market? What if we do get a sell-off at this point? And the answer to that is very, very well likely that as we start to move higher and higher, you are going to see some sort of sell-off. That's given. The question is whether it's going to be a 20, 30% sell-off, or it's going to be a 50% sell-off, or 80%, etc. In the bull market of 2017 and in the bull market in 2020, 21, we did have 20, 30% drawdowns on everything. And that was just a little dip that got bought up pretty fast. Within a week, we're already back at all-time highs. So 20, 30% drawdowns are a vanilla flavor. So a Bitcoin at right now at 47,000 and change, you're looking at a little bit between $10,000 and $8,000. So maybe like an $8,000, $9,000 drawdown, which brings you back to like 30 plus thousand. But the higher up we go, and the higher up we go in terms of that, plus the drawdown at 20%, the more likely it's already setting floors here. So if we, let's say, go to 50 and we get a 20, 30% drawdown, you know, we're looking at about a 40K Bitcoin, which is really not far off from where we're at. So what I'm trying to tell you is, as the price goes higher and higher, and as people keep on FOMOing in and people take profits, every single dip is going to be higher than what we have originally. So your cost basis is going to be low. It's going to be lower and lower as you enter into these periods before the actual pump. So I'm not sure if that kind of makes sense, but if you're starting to DCA your way in now, or start to lump sum your way in now, your cost basis is going to have a very, very good cushion. Just like the people who bought when Bitcoin was at 20K and at 30K and at 18K, even though it pumped 10%, 20%, they're still right now, it wouldn't even hurt them, even if we do go down 30% or 20%. Does that make sense? So usually the way these things work is we get the stealth rallies happening, and then we get the parabolic runs. And that is where you want to really pay close attention, when the prices get way too high. But the moment, I'm super bullish, all in on it. I think that we are in a major bull market. Nobody really knows about it. And people are just kind of falling asleep at the wheel, not realizing that they're going to eventually have to pay higher prices in the coming months, as this asset class just keeps on growing and growing and growing. Now, a couple of pieces of evidence that we see from that has more to do with the inflows coming into the institutional products, specifically with outside of Grayscale. And I think they're averaging right now at about 3 billion and change for each of the products, total AUM, for both Fidelity and for BlackRock, which are your top two ETF, Bitcoin ETFs. And the rest of it's kind of like sprinkling in, but between those two, you're looking at about $6-7 billion worth. And it's been a grind since January, but it's been a consistent flow of money coming in. And I suspect as the halvening cycle starts to come closer and post-halvening cycle starts to come, people are going to realize that, wait a minute, we only have $22 billion worth of 21 million coins of Bitcoin. And we are going to produce this asset class called the ETF that Fidelity and other pension funds, pension companies that run pension funds, let me clear my language here, are going to allocate 1% to 2% into everybody's portfolio. There just isn't enough. There isn't enough coins out there to offset the demand. And that is, you're actually front running that event right now. And hopefully this kind of lends everybody to think about this very carefully, that even if everybody does a 1% allocation to Bitcoin in the world, the amount of money coming into Bitcoin is going to be way more than what's happening now. And if you track how Bitcoin is being measured as an asset class, it's being measured as a high beta tech stock. All right, hopefully you enjoyed this video, and I'll see you guys next time.